My next guest says that is bullish for equities and crypto, and he's seeing opportunities in the sectors that surged following Powell's dovish speech at Jackson Hole. Joining me now is Eric Johnston. He's chief equity and macro strategist at Cantor Fitzgerald. Thank you so much for joining us. I'd love to sort of just get your first take on all of the news today surrounding Lisa Cook, and the markets call it somewhat muted reaction when we don't even know if she's able to continue her job as a member of the Federal Reserve. Why are the markets so sanguine?
So while I completely understand the concerns around Fed independence, around going against the norms of what we've seen over the prior decades, the reality is that this is very bullish for risk assets. This is one step closer to the board being much more Trump appointee dominated. They're going to be incentivized to have a strong economy for the next 4 years, and ultimately risk assets like cheap money. And that's one of the reasons why we think that you're going to see strength in risk assets, over the coming years. One of the concerns from the financial markets is, will the curve steepen? So yes, they can get short end rates lower, but due to the potential inflationary impact, is that going to pump up the long end of the curve? And our view is that there are things that they can do from both the Treasury and the Fed to also help to bring down the long end. And we can go through some of those, but the idea is that the Trump administration wants mortgage rates lower, so they are focused on the long end of the curve. And there's a lot of tools in the Fed's tool belt and a lot of tools in the Treasury's tool belt to be able to control that long end of the curve. So ultimately, I think this is quite bullish and sort of one step forward to that rate cut cycle.
I want to sort of circle back then on some of those comments. I mean, you said that the Fed is even further or is incentivized to do what is good for the economy to make it stronger. But isn't that always the case? And then are you somewhat suggesting here the Fed is no longer independent because this is the pressure that could be placed on them if they don't cut interest rates?
So typically the desire of the Fed is for the long-term health of the economy.
Right.
So they're going to be looking out 5, 10, 15 years and trying to balance inflation, with employment. And one of the reasons why there has been this independence. And so I think just the reality of, however you want to call it, of people that are going to be going into the Fed that have, certain thoughts around wanting to get rates lower and have a strong economy today, and believing that AI and other secular trends are going to ultimately bring down inflation. Whether that happens or not, it's to be determined. But if they go in with that view that ultimately these secular trends are going to do that, they're going to be much more likely to run an economy that's a little hotter than would normally be run by a Fed.
Okay, so I guess then we'll set aside whether this is going to happen or not. You are making the assumption that someone that comes in, if Lisa Cook is not able to continue her role, will be more apt to continue to make decisions that are bullish, maybe not only for the long run, but also for the short run. So if you are in your camp and you believe that, give us some ideas about why you think particularly that's good for housing. Of course, we know if rates are lower, but are there particular names there that you're liking? And what does all of that have to do with crypto?
Okay, so absolutely, in terms of, we like the home builders, and we also like small caps. I think small caps do very well in this current environment. So not only are you going to get a rate cut cycle, that's going to benefit not only companies that have more debt, but also that are frankly more speculative, right? Lower quality, where bringing down those rates is going to increase risk taking, and you're more apt to buy a riskier equity. In addition to that, as we look into 2026, I think the economic outlook is actually very strong. So we're going through this period of uncertainty right now. Tariffs are seeping into prices. But as we look into 26, you're going to be lapping those higher prices due to tariffs, and you're going to be lapping the uncertainty. And you have all the investment coming into the U.S., whether it is onshoring or the investments from overseas. And that's one of the reasons why you're seeing earnings estimates go up, not only for the S&P 500, but also for example, small cap. Small cap earnings estimates have been very challenged for, frankly, years which is one of the reasons why they've been a huge underperformer. But those earnings estimates looking forward are actually starting to turn up, which we think is very powerful. And, pivoting to crypto, we've been bullish on Bitcoin for a while now, is that we think that it will continue to move higher, and having cheaper money, increased money supply, institutionalization, the legislation that's passed, support from the administration, all of this should continue to be very positive for Bitcoin. And we think this, rally that we've seen will continue.